Good evening, friends. Welcome you on the Saturday evening. And today I'm going to discuss about what are the different types of mutual funds. We all are know about that the mutual fund are there in the market existing and how fund manager is managing the mutual funds. There are so many big institutions who are managing the funds and investing based on the market risk. For that, they have appointed the fund manager, and fund manager has to decide where this fund we have to invest in the market so that there we can get a better return from the market. So we all are depend on the fund manager and the company where we spend the money, and for that they are some they have some charge on that and for their services. And there are so many applications which we are using because it is very easy to manage, because as a human tendency we always like we always like to do the work which is very easy, right? We don't have to spend our mind and time as well. But it is always a good practice if we think twice and thrice before investing our money in the market. We I'm sure I have a trust on that. Okay, the fund manager has a very good knowledge and they will spend our money in the market. But it is also a best practice that we can do a some some homework before some do some homework before investing our money. And we should know about what kind of the mutual fund are there in the market, and where we have to invest based on our needs. We have to spend our daughter's marriage, my kids' educations, our dream house, our picnic, all over the world, outside world, spend good time with our family. So there are different things and different things, and people needs as also a different, right? So might be the person who is in the car, driving the car, and he is thinking about the person who is riding the cycle. And the same time, the cyclist, he is thinking about the BMW and other cars. So different people need is different. So based on that difference we have to invest the money in the market. So there are four broad type of mutual funds: equity, stock, fixed income, bonds, money market fund, short-term debt, or both stock and both. Simply we say balanced or a hybrid funds. Mutual funds are one of the most popular ways American invest, thanks to their easy of use and build in a diversity. Less easy for new investors, maybe shifting through the thousands of mutual fund on the market. Generally speaking, there are a four broad type of mutual fund: those that invest in the stock, equity fund, bond, fixed deposit, short term debt, money market funds, or both stock and both, balanced, or we can say hybrid funds. Mostly we thinking about the equity and debt funds, but we should know about the other funds as well, like bonds and hybrid fund as well. So every mutual fund is designed to spread around risk while capturing wide market gains. Some types of funds carry a higher amount of risk than others, but also higher potential rewards. Here is a more detailed look at the most common type of mutual funds. Equity funds. So equity funds buy stocks of a collections of a publicly traded companies. Most mutual funds on the market, 55% are some of the equity funds. According to the investment company institutes, equity funds have a higher potential for growth but more potential volatility in the value. The younger you are, the more your portfolio should include equity funds. Financial planner advise as you have more time to weather in inevitable ups and downs in the market value. Equity mutual funds can be sliced and diced in a several ways depending on the goal of the fund. So funds based on a company size. Some funds are focused only on large cap, some focus on small cap companies, and some focused on the mid cap companies. So what is the large cap fund? In the equity, they are subcategory large cap fund, mid cap fund, and small cap fund. So companies with a market value of $10 billion or greater, it will comes under a large cap fund. So you can check the worth of the company before investigating the money. Then you will get some idea. So mid cap fund companies worth are as 2 billion to 10 billion dollar. This is a level of middle. A small cap companies worth are 300 million dollar to $2 billion. So in this three category, we have to think twice and thrice before investing the money. So industry or sector funds. These mutual funds focus on a particular industry such as a technology, oil, gas, aviations, or healthcare. For example, investors who want exposure to gains by companies like Google and Apple could put money in a technology fund. Ownership in a different sector funds can help diversify your portfolio so if only one industry is hit hard, like the busting of the dot com stock bubble in the 2000. If you are heard about that, markets was down on that time. So that was called a dot com stock bubble in the 2000. Those losses can be offset by gains in other sector. Growth and valued fund. The investment style of the fund is another mutual fund differentiator. Growth fund, as the name suggests, seek stock that fund manager believe will have better than average return. Values fund look for companies whose stock is undervalued by the market. So there are some more funds we have to discuss. And today I am done with my session. It is almost 9 minutes completed. So rest of the I will cover it tomorrow. And apart from that, mid, small, and large other funds, I will discuss the more funds where we have to see and check out the company. If you are any fund value, we are spending the money, then we have to check it out the portfolio of that company. So I will I will get a time, I will let you know okay how you can identify the good mutual funds through the sub websites. So keep watching my videos and share with your friends and loved ones who can make some money using a mutual fund, so that make you healthier and wealthier in a 10 to 15 years. Because mutual funds you have to have patience. It is not a one day dream you can be a wealthier, right? So If you are investing some money in somewhere else, then you have to patience. You have to spend that money in the market and started the SIP linked with your account and forget it. Maintain that amount every month in that account and forget it. What would be the benefit when it would be 10 to 15 10 year or after 15 year, you will realize then what is the power of computing. So with that, I am done with. Tomorrow I will again continue with my fund, with my session related to funds. So you will get some more information and wide open your mind as well. Yeah. Thank you.